allocations are for each quarter. I'm doing this kind of retroactively because I've had some questions about how I go about it, but basically I'm going to go through all the logic that I went through at the end of the first quarter of 2018. So I would have done this right around April 1st to determine what I want to allocate each week during the second quarter. So the first thing I did was I pulled my quarterly profit and loss statement from the first quarter. So I want to see what happened for the first quarter because I'm going to base some of my assumptions on what actually happened. So basically, I took those values, so you can see my income 44,913, and then my operating expenses of payroll, sales and marketing, and general administrative, and those are the three basic high level buckets that I group things in. Now you can see if I expand my profit and loss, you'll see that I have much more detail underneath each of these. So, for example, here's my payroll grouping. These are the sales and marketing expenses, and then I have a lot of detail under the categorized general administrative. But basically, for this purpose, I want to roll everything up into those parent accounts. And then my G&A expenses were about 3,400. Total operating expenses were about 8,700, and then my net operating income was 36. Now I do have some other income and other expense, and for the purposes of this, I'm not going to include them for my forward-looking um, assumptions. And the reason why is because anything that I categorize as other income or other expense, um, I'm considering that as something that falls outside of the normal scope of business that really won't happen again in the future. So I took on a really strange project for from a business standpoint. Like basically, I sourced some items for someone for a video shoot, which is like not anything close to what I do as a business. So for the purposes of this model, I don't want to include that in the future. So I almost act like that didn't happen um, from this standpoint because it's not likely to happen again in the future. And then next thing I do is I take what did I take as owner's draws? So I took about 21,000, and then I sent my $4,000 tax payments as well. And then basically this is going to say, all right, based on that, these were my total allocations to each of those buckets, percentages associated with that, and then my total weekly draws, and then my quarterly profit that I took to get to my total compensation, 26,000. So next thing I do is, that is actuals. There's no real refuting what happened or what didn't happen. That part is very easy. The next part is, what's going to happen in the future. So for me, I have first quarter. I always have a larger payment that doesn't happen every quarter. So I think my quarter two revenue is going to be about 33,000. So I just hard coded that number in. I think from a dollar standpoint, my payroll expense for my payroll or for my accounting associate is going to be about the same. So I just copied and pasted the 3,000 into here. I think my sales and marketing expenses are going to be much lower. It's going to be about $1,000, and my G&A I think is actually going to be a little bit lower as well. So I'm going to plug in 2,500 there. So based on that, I think it's going to take about 19.9% to just handle the day-to-day operations of the business. So you can see that number is going to flow down into my allocation percent. So 19.9% is what I think I actually just hard coded the 20%, but close enough for me. So on a weekly basis, I'm going to transfer about 20% to that operating account. From there, basically, I've got about 80% or $26,000 of which I would call like total discretionary cash flow. So from there, I get to decide what happens with that 80%. So first thing, you know, I would like to take about this much compensation from a a weekly owner's draw standpoint, which comes out to about 65%. Okay, so 65% of each dollar that comes in is going to go to that account. Okay, so 65%. 3% is going to be profit, which is really just earmarked for our quarterly distribution. About 12% is going to be tax. And actually, this is just a plug. So I know on a quarterly basis, I'm going to make $3,500 payment to the federal government, $500 to the city, and I won't any state tax because of the new laws in Ohio that income is tax-free for small businesses up to a certain threshold, which I don't clear. So $4,000 for taxes, which comes out to about 12%, and then the remainder, this 19% that we talked about earlier, is going to be what I should end up with to operate. So all of these percentages, from 65% for owner comp, 3% for profit distribution, 12% for tax, and then 19.9 for operating, those basically flow over to this sheet. So when I plug in my income each week, I'll be allocating based on the percentages that are going to get me to where I want to be for the quarter. The only other real decision I need to make is, okay, so we expect to have this much profit account at the end of the quarter that we're going to distribute. Basically, this says, what do I want to do with that? So I want to take 59% of that, which reflected in my model. I want to take 59% of that, and I want to take it as compensation. And then this much I want to bump up my reserve. Now, this number, don't worry about this because this is basically what was in there from last quarter. So that number should really be about 587 once I do that. So that's how I come up with my quarterly targets. And then if you expand this, and I'll post a link to where you can download the template of this model. But basically from there, all of these assumptions are mirrored in each quarter, and I just apply a growth rate over the previous quarter thereafter. So for example, if we think we can do 33 in quarter 2 of 2018 and I grow at 6%, that should put me here. And then all of those percentages from the previous quarter are just going to give me a preview of what that would look like if everything kind of stayed consistent, assuming no big changes. And then this percentage is just carried on for a 3-year window. And basically then what I do is I have an annual roll up here that I can take a look and say, all right, if all this stuff stays flat and I grow at 6%, this is what 2018 looks like. I would expect total income to be about 150, of which I would take home about 97. 2019, this is the roll up and this is the take home, and then 2020, this is the roll up and this is the take home. So this is how I determine my cash allocations that you're going to see on a weekly basis. If you have any questions, hit me up in the comments. Thanks.